Hello and welcome to Budget with Business Standard. I'm Binu Sandhu. Now we finally know the date of the budget. The finance minister will present it on the 23rd of July. Now last month on the 20th of June, she met with industry bodies, representatives of industry bodies who put forth their demands, expectations and recommendations before the budget. Our show today is going to focus on those expectations the finance minister has had by the time she presents the budget. She would have had about a month to ponder on those recommendations, and the show is going to talk about those. Let me begin first by introducing my colleagues, Asit Ranjan Mishra, Economic Affairs Editor with Business Standard, and Raghav Agarwal, Special Correspondent, Senior Correspondent actually, with Business Standard. Welcome to the show, Asit and Raghav. I'll begin with you, Raghav, since you reported on that pre-budget meeting with India Inc. Um, if we look at some of the recommendations, if we specifically look at, say, capex expenditure, one of the wish list was that increase capex expenditure. Could you elaborate a bit on that, and then Asit can weigh in with his perspective.
So hi, thank you for having me. The industry is of the view that the government needs to increase the capital expenditure more than they had done in the interim budget, which was announced earlier this year. So in the interim budget, the allocation towards capex was increased to around 16% as compared to the revised estimates of last year. This year, industry bodies want that to be increased by 25% as compared to the revised estimates of last year. So I'm getting a sense that they want to do that to in order to revive the demand. I think Asit sir would be able to tell that better. So yeah.
Yeah. So obviously the demands are well intentioned, but the problem is there is a capacity constraint always in the economy. So there is so much that the economy can absorb in terms of capex, and also so much government can actually implement and spend through capex. So the allocation, as Raghav was pointing out, is around 11.1 trillion rupees for FY25. I actually do not see that to be increased substantially, because most of the capex goes towards roads, highways, and railways. So the problem is the government has to first acquire land to roll out these infra things. So, and then the states have to come in there. States have actually to acquire those lands. So there is a delay actually. There is as much that the center can push through. So I do not see an increase there. Second point is about the capex, the interest-free loans that the center gives to states. It is around 1.3 trillion budgeted. That also I again do not see to be increased substantially, because in the previous years also the states have not been able to match the allocations, because also it comes with conditionalities. So I actually do not see any major changes in the capex numbers in the budget.
So that will be like a dampener.
Yeah, that is the reality basically.
All right, all right. From her pre-budget meetings with various sectors to now, we have started kind of getting a sense of what the budget will possibly have. In fact, if you look at our page one story, the lead story also says budget push likely for social sector to lift rural demand. But moving back to her meeting with Industry Inc., they also spoke about taxes. They discussed taxes with her. What was their wish list on that front?
On the taxes front, the basic demand from India Inc. was that the tax slabs for lower income and middle income groups should be rationalized, should be adjusted. For example, one of the recommendations was that the basic exemption limit should be increased from 3 lakhs per annum to 5 lakhs per annum. Uh, the other recommendation was under the new tax regime, the standard deduction limit of 50,000 should be doubled to 1 lakh, and that would essentially bring the tax-free slab from 7 lakh to 8 lakh. And also they said that the 30% tax slab should be reserved for people with income over 40 lakhs. That was one of the recommendations. On the corporate tax front, the India Inc. believes that a status quo should be maintained. It should not be changed. And there should be simplification on TDS, tax deducted at source, as well as the capital gains tax front. On the indirect taxes, the industry believes that in the goods and services tax (GST), the number of slabs should be reduced to 3, and that one of the suggestions said that it can be achieved by merging the 12% and 18% interest to 14 to 15%, somewhere between that. So these were widely the recommendations on tax front.
So GST in any case has been a very, the taxation structure has been very complex. Asit.
Yeah. So basically, on the direct tax front, on the personal income tax front, one thing we have to remember is the rebate was increased from 5 lakh to 7 lakh in FY24 budget. So within such a short span of time, it is actually very difficult for the government to again go for a rejig. So I now do not expect a major change there. What the government can do, as Raghav was referring to, is the standard deduction, where it can be increased from 50,000 to 75,000 or 1 lakh, as the industry is demanding. On the GST front, it is very unlikely that the finance minister will make any major announcement in the budget, because she herself will realize that first she needs a nod from the GST council. The plan to merge the slabs is very much under discussion. There is a committee under the state chief minister, deputy chief minister of Bihar, which is contemplating that issue. So that committee will make its presentation to the GST council. The GST council will give its note, then only it can be implemented. So it is so the finance minister is constrained by the final verdict of the GST council. So before the GST council makes its decision, it is very unlikely that she will make any such of announcement in the budget.
All right, thank you, Asit, on that. Manufacturing, coming to manufacturing, what is corporate India looking at in that? On that front?
So the biggest demand under manufacturing has been to expand the PLI scheme to include more sectors, the production linked incentive scheme. They want the PLI scheme to include more sectors like leather, gems and jewelry, handicraft, like that. And there was this new rule which was introduced, which said that new manufacturing units will have to pay a concessional tax of 15%. That expired on 31st March. So India Inc. is also demanding that there should be something about that. It should be either extended, or something it should be talked about. The other thing is on the custom duty front. So India Inc. believes that on the custom duty front, if it is reduced on raw materials, it could it could jeopardize the Make in India initiative. But if it is increased, it can finally lead to an increase in the prices for finished goods, finished products. So they want a graded plan to be introduced, wherein there would be introduction of more competitive level of custom duty over the next 3 years. So they want that.
So a balancing act also over there, Asit.
Yeah, when it comes to manufacturing, the government has actually already done a lot. It has reduced the corporate tax. So it was expecting that the private capex will revive. But as we know, private capex, the new investments is at a 20-year low in the first quarter of FY25. So clearly those incentives, those measures by the government haven't worked. Despite repeated prodding by the government, including the finance minister herself. So will the finance minister further incentivize the private sector? Then the government has to take a call there, whether that will work or not. But on the PLI front, obviously that has other implications, like it is the labor intensive PLIs are needed to boost your jobs. So there the government may take further more decisions. And on customs duty, obviously the government has to now give a clear direction where we are headed. Are we headed, is the protection that the industry enjoys, the high customs duties are here to stay? or the government will give a clear direction that will reduce them in a phased manner within this many years. So we have to wait for that.
One of the things that Asad mentioned over here was jobs. Would you want to come in on that and say, because employment is another thing that corporate India spoke about when in their meeting?
So, India Inc. has largely acknowledged that there's some sort of a problem with employment generation in this country. So, one of the suggestions they made was there should be an employment linked incentive scheme, ELI, on the lines of PLI scheme, which would incentivize companies, enterprises based on the sort of employment they are giving to people. Under that, they want additional benefits for employing women in their factories. So that is one of the key suggestions that I saw. The other was the expansion of Swanidhi scheme to rural areas. So the Swanidhi scheme provides 10,000 rupees of capital loan to street vendors in urban areas. India wants that to be increased to expanded to rural areas as well. So these are largely the two recommendations.
And the significance of that?
Yeah, so jobs has been a problematic area for this government, obviously for previous governments also, because nobody actually has figured out how exactly to create jobs in the economy, because obviously now the private sector dominates the economy. The government cannot create as many jobs, though there are vacancies in the government which remain unfulfilled. Government may go for that, like in sectors like railways, there are ample vacancies available. But as Raghav was pointing out, this is a good suggestion to come out with a labor linked, right?
Yeah,
Raghav?
ELI, yeah,
Employment linked incentive scheme like PLI. So let's see whether the government will finally go for it. But this government may take some measures towards employment generation, because as we have been reporting on the unincorporated enterprises front, the data for which was released recently. So our and the job creation by the informal sector has actually come down from the 7-year period, from the level of 7 years ago. So there is an employment crisis that the economy is facing, and the government should better take some serious measures in this front.
We're just 2 minutes away from, wrapping up the show, but I would want to ask you quickly about the MSME sector. One of the things that kicked in on 1st of April was bringing down the payment cycle from to 45 days, but there are certain niggling issues, and we did a story also on that last week, an in-depth piece which was done by a colleague, Harsh Kumar. Could you quickly speak about the MSME sector?
On the MSME front, the industry wants a working group to be formed, which would identify the schemes that are underperforming and also recommend the measures to improve that. The other part is there should be they say that there should be MSME universities across India, which would train and skill people wherein they can work in those MSMEs. Specific skills, specific training should be given for the MSMEs. The third one is there should be a boost to employment in MSMEs, especially to women. So these are largely the three.
Yeah, so MSMEs are actually the ones which will create the large chunk of the jobs in the economy. And I think I also expect that some measures will be announced in the budget. So apart from what Raghav has told us, so there are basically the government we have reported that contemplating to increase the time period given to MSMEs to repay their loans before they turn into bad loans currently from 90 days to 180 days. That is one of the measures the government is thinking about. And also the industry has been demanding that let's create a 5,000 crore fund for the MSME sector to boost their exports and to promote their products globally. So these are some of the measures which government may think of taking.
Thank you so much, Asit, and thank you so much, Raghav. Thank you for watching. In the week ahead, we will have a lot more discussions, so please stay tuned.